the trough of the bear market. I've got mixed feelings, but I'm mostly long. So I want you to know that I'm mostly long and I'm actually using a little bit of margin. However, despite that, which I don't typically do, I don't typically use margin. But despite that, I am still somewhat cautious. And I'm going to start with my caution and then get into my reasons for being long. So we heard Powell speak. It wasn't anything of a hawkish surprise, despite the 9.1% CPI. However, since then, we've heard Kashkari talk and be somewhat hawkish. Say, we've got multiple rate hikes, we're not near the end of the cycle. And that's interesting because the whole reason why the market was able to rally and do what it has done the past, call it a week, several days, whatever, it's I guess slightly less than a week, is because markets are now pricing in rate cuts and people feel the tightening is going to end sooner rather than later. Inflation is going to come down, and therefore, in a forward-looking market, you have to begin buying. We've got tomorrow Bullard, who is the most hawkish member on the Fed, or arguably one of the top 3 most hawkish members of the Fed. Kashkari was saying what he said, and he is arguably the most dovish member of the Fed. So if the most dovish member of the Fed is saying that, we can't go into the most hawkish member of the Fed being so optimistic. Mester has had some market-moving comments in the past couple months. She speaks on Thursday. So all things to think about. However, we heard what Kashkari said. People know what was said. And the market was barely down today. So it seems to me that the market is on pretty strong footing. And it would require Bullard to say something very hawkish to really move markets. Kashkari went as far as to say if inflation is still hot, he would be open to a 100 basis point hike, if I'm aware. He said 75 was possible. He said 50 was possible. I think these are all things we know, and I guess the market knows them too, and nothing crazy is happening today. We obviously had the China tensions, we had Kashkari, and the market is just having a little bit of a consolidation after what was an aggressive rally. Nothing too out of the ordinary. So, why am I long? I've mentioned these things. A little bit more analyzing the Fed. One thing that Powell said that stood out to me and caused me to have this pivot, take off some of the shorts, et cetera, et cetera, et cetera, except for Apple, which obviously beat earnings, and was a pleasant surprise for fundamentals. He said, when asked something about asset prices, that asset prices had fallen, so therefore the risk was lower. He identified current market pricing as lower risk. Common sense, but you would expect that if there was significant concern about asset prices existing right now where they are, and bonds are asset prices, he would say something along the lines of, we want to see asset prices come down. We're still concerned about asset prices. Fed members in November, they were, selling stock, talking about how markets are historically valued. That doesn't seem to be the case anymore. Bullard in the past has said, and we've talked about this in previous videos, that the market is pricing in the tightening. Now, one other reason for concern, the 10-year has come back quite a bit. I think it's a little too low for the 10-year. And maybe we need to see some give back there. That's another reason for concern. If we go back to 2.8 or something, I don't think the market's not going to move on that. Maybe, it's probably not going to be anything crazy, but it's going to be a little bit of the brakes on the wheels. Either way, we'll see what happens and adjust. But Powell is not saying asset prices are too high. He's saying prices are lower and therefore risk is lower. We can't ignore that. That's true. I think we all think that's true. Asset prices are lower and therefore risk is lower. So I am concerned. I'm cautious about what's going to happen over the next couple days, but I'm not doing anything dramatic. I'm using some margin, just about 5%, nothing crazy. And I'm buying emerging market stocks. For example, StoneCo. StoneCo just got, or recently had earnings and were up double digits after the earnings. One of the more large companies in Brazil has previously had positive cash flow. The stock is down some 80 or 90% from the highs, tremendously down from the highs. Buffett and Cathie Wood are both in it. They've had problems about the credit side of their business, but in the last earnings call, they said they hired somebody from Santander and JP Morgan, and Brazilian rates look like they might be peaking. Yes, obviously we want to see something with U.S. rates to indicate that, and it hasn't responded so much, Brazilian rates to U.S. rates past month or so as U.S. rates have come down. But Brazil just got a massive cash payout from Petrobras that goes right into their pocket, helps them pay that debt, takes that risk down a little bit. So, and also gives Bolsonaro a win. That seems to be a reason people are concerned about Brazil. They're concerned about the political risk. Nothing solves that like some good money from the private sector. So I think StoneCo down here, well below where they were after that double digits earnings call, possibly seeing some good quarter here, I think could be a tremendous buying opportunity. And these are the types of stocks I'm getting long right now. Stocks that are well priced, really off the highs, really well priced relative to what they do and what they can produce in a single quarter. I'm okay buying that kind of company. I mentioned the risks. There's more risks. US, China, Taiwan type situation. Commodity prices can go back up. Yields have come down. Dollar index looks like it's starting to roll over. Commodity prices can go back up. There are reasons to be concerned. I don't want to gloss over that. But I'm taking it down on the options, and I'm buying good stocks that I think are good at good prices, and I'm going to ride it a little bit. I'm still hedging. Like I said, I think yields are a little too low. I do have still longer yield plays. I've extended those out into December and October. I just think it's almost a certainty that yields are going to go up, particularly in that kind of time frame. Kashkari, most dovish member of the Fed, is saying the tightening cycle isn't over. The 10-year is at 2.5 and change. The Fed funds rate is 2.25 to 2.5. They're not going to do a 9 basis point hike. They're going to do a 25 basis point hike. So that range can get up to 2.75. The 10-year should probably have some sort of premium over that, although it has inverted with the Fed funds rate in the past. I don't think that's going to happen. So that's my hedge. I'm not hedging directly against the market right now. I have one very small position, very small, hedging directly against the market. I think a more appropriate way to go about your protection right now, and I think it is good to have protection right now. I think you can go long in well-chosen stocks, but I also think it's a good idea to have protection right now is in yields. I don't think yields are going to go below 2.5%. I mean, it's very unlikely that the Fed funds rate and the 10-year are going to invert. They do. It's a pretty good recession signal if they do. We're in a recession. Maybe it will, but yields pretty low. Yields pretty freaking low. So that might be something that mixes things up. Either way, I have mixed feelings, but there are some stocks that the feelings are way more positive, and I'm going to play those stocks that I'm way more positive on. So we missed a little bit here, hedging ourselves. We were kind of flat the past couple weeks, is what it is. We'll take it to avoid some big downside every now and then. And hopefully we can get some upside here in well-chosen names. I think StoneCo is one. I'm sharing it with you. Me and my fund have a position. We'll see what happens. Tomorrow we hear from Bullard. Maybe we'll adjust based on what Bullard says. But here we are. Maybe he'll say yields have come down, so they're no longer priced in. They got a little more pricing to go. That's kind of what Kashkari was hinting at. We'll see what happens. That's today's video. And until next time, peace out.